Hey everyone, it's Sterling here from Day Trading Forex Live. It's October 2nd, 2012, and I'm going to go over this Euro trade they just took. I took a short from one spot 29.50. It's about 5 pips or so above the current price. But I wanted to illustrate this trade because it was a nice point that we had here on this Euro position. So I'm going to zoom out to the hourly chart and just give a wide perspective here. But we have this last high that we had. It was let's see here, a couple days back. On the euro, we had a nice high set at, let me get the exact mark here. The overall high set at 129.58. And so what we've done is we've actually come back up to that point and we've broken through that point. But what I like about this is the fact that we're extended. We're at this point in an extended market, and we're hitting at least the 90 pip run for the day. So in a market where we've been shallow of 90 pip runs, this one's actually 88, 89 pips. So basically right there at that 90 pip mark. And we're, generally looking for at least a 90 pip push through the day. And we've seen a little bit shallower moves lately. But seeing this has moved 90 pips, we're into a typical New York reversal time where we haven't seen the reversal yet in New York. And as we get later in that session, as the market moves later in the session, I expect the reversal to come. And now that we've seen a stop run at that level, the market has broken through those previous highs and has got rejected back down, which is showing us that, okay, this is more than likely the high probability point because they're taking out the stop. So the patience is kind of paid off in this situation. As we were in the live room here today, we were talking about this push through the last highs, and I really didn't like it because, number one, the market was not extended at that point, and number two, the candles weren't confirming a stop run. So at this point, we've now confirmed the stop run. The reason I was taking the entry from 50 was a fairly straightforward entry. Again, we discussed this a bit in the room today, but you measure the length of that stop run candle. In this case, it was 29 pips. Let's just say 30 pips. So the halfway point of that candle is 15 pips. Now, that's where I want to be taking the entry. I want to take the entry on a 50% pullback of the stop run candle. Another key point, especially as candles get a little bit wider in this situation, when you're taking the entry, you want to be sure that 20 pips is going to cover your stop. So from the entry of 50 here, actually gave a little bit better of an entry. Went a couple pips higher than 50. Went to about 52, but with an entry of 50 here, the stop is at 17.5. Now that's going to allow for a retest. The reason that I was taking it there is because if that's the stop run high, this is a big daily level, strong rejection. I just really wasn't sure how much deeper of a retracement we're going to get. Now, the safer option, what I would prefer, is not just to have the highs covered by a pip as I do here, but I'd like to have them covered by a couple pips plus the spread. Right now, I'm only covering the high by about a pip plus the spread, so it's not that couple pips over the stop run high that I would like, but nonetheless, it is at least a pip or so above the stop run highs plus the spread, and that's going to allow for the stop run. If this truly is the stop run, more than likely, in a saying that I say quite a bit in the room, is that once you've identified the stop run, that's where we can put our stop above that high or below that stop run low. It's a very dangerous proposition to put your stop above a high or below a low, because that's typically where smart money is going to go find the orders and find the stops. But after they've spent the money to go find the stops and take out the stops, generally the stop run does hold, and that's why, even though I'm above that by only a pip, I feel fairly safe with that order. So what I'm going to do here, because the cycle is not all that clear, is I'm only going to run a 2-to-1 risk reward on this trade. So with a 20 pip stop, I'm going to have a 40 pip take profit, which is going to get us out at 29.10. And the reason I'm going to do that is because on a counter smart money trend trade, or on a trade where the cycle is a bit unclear, what I like to do is just stick to the 2-to-1 risk reward and play it a bit safer. So we'll be back with any updates to this trade, and we'll see you guys shortly. Alright guys, we're back for the conclusion of this trade. I'm closing this one out at plus 30, and I'm doing that not because the market's hesitating, or not because I don't feel like it ultimately may get to, or ultimately won't get to that 1 spot 29.10 level that is the final take profit. But the reason I'm closing that is I have a pretty hard, fast rule that that I use a lot of times, and it's served me well. Um, as far as getting out of trades when I should, and that basic rule is that when the market closes at 5 o'clock, you go into a time where typically smart money is accumulating through that position. You don't see any rhyme or reason to the price action, and you see a lot of back and forth chop. And within that back and forth chop, a lot of times you can go and if you were to set a trade at break even in this case, trade at let's see here with an entry of 50, or if to set your take profit here at 50, the possibility is there, even if they're going to continue the market down, ultimately they're probably going to come back up and tag the stops, or that's a possibility. And so the bottom line is you don't know what they're going to do, and we trade times where we have a very high probability as to knowing what they're going to do, or have a good indication of what they're going to do. And when you enter this time, you're essentially guessing, and we're not in the business of guessing. We play probabilities that we can determine based on how we know smart money tends to manipulate the price. When we lose those probabilities, then you're essentially getting into guessing, and that's no better than going down and drawing a casino lotto ticket. You're essentially guessing is essentially the same thing, and that's what we don't do, and therefore that's one of the reasons why I get out of trades more often than not, as it does come into that 5 o'clock close. And that's just my personal opinion and my personal way of doing things, and it served me well, and that's why I am exiting this trade as well around the plus 30 mark. It was right around plus 32, 33, but we'll just call it plus 30 for round number or even number purposes there. And it was overall a good trade. The key point to take away from this one here, guys, is that we were getting late in the New York session, and we were coming into on the hourly chart and making a large stop run on a key level. One of the things that you got to understand about how smart money tends to run the price is you get into less liquid times of the day, which, noon is what I would term as a less liquid time as compared to 8 or 9 or even 10 or 11 o'clock. And so you get into those less liquid times, they're much less likely to actually get the market through one of those areas. And so more often than not, during a less liquid time, they're more likely to turn the price. And so late in the New York session, this was around noon, we're seeing the market create a stop run on a fairly sizable level, and all that really combined together. Although I'd prefer to see it in the earlier part of the New York session, 8 to 11. I prefer trades a little bit deeper in that 10 to 11 o'clock, a little bit later in the New York session, the time we look for. This one was a little bit later. It was outside of that time by just a bit. Nonetheless, when I see this large of a stop run of that level, and as I zoom out here to the 15-minute chart, we can let me draw this up here so you can see where we're creating the stop run. So when I see that key of a stop run, or that aggressive of a stop run, and then I get a good enough entry to where 20 pips is going to cover the highs, for me that's something that I gotta take, and this one ended up paying off quite nicely. So anyways, that's going to wrap it up for this trade. We'll see you back with the next trade. Until then, guys, happy trading.